Good evening. Today's day is the 24th of June 2018. I am backtesting and I am building Confluence in order to execute trades. I am on a EURUSD 15-minute chart and I want to see signs, certain signs that let me know that it is okay to get in the market. I want to short the market even though price is making higher lows. I want to short the market. When building Confluence, we're looking for 3 or more, but the more Confluence being built, the stronger the signal. So we see that price is making higher lows, even though price did come down to my daily to retest. It's making higher lows. It's heading to the upside. So let's look at our RSI along with the histogram and MACD. So we look at the RSI, and even though price is making higher lows, when you zoom in on the RSI, first off, the RSI is overbought. It's too high. It's at the 70 mark. So we can look to short the market just off of that alone. Let's place a trend line up, as you see right here, and we head it in a downward trajectory. And we see that the RSI is respecting it and is heading in the bearish direction. However, when you look on price on the chart, as you see, my crosshairs are lined up right here. That's the peak. It's making higher lows on the chart. However, on the RSI, it's starting to head down on the second peak. As you see, it's still making higher lows on the chart, but it's making lower highs on the RSI. The second peak on the RSI is where I would have shorted. And if you needed more confirmation, you could head to the histogram, blow it up. And as you see, the histogram started to downtick to the negative side. And the MACD crossed. If you line it all up, it's all lined up. The MACD cross, along with the histogram downticking, along with the second peak heading to the downward direction on the RSI. However, price is making higher lows. That's enough confirmation for me to short the market. Now, considering I do not know exactly how low the market will go, price will go, I'm looking for the first pullback, the first retracement, and price always retraces. So the fib levels aren't even set yet. So as we see, price is heading down in our direction and it's looking lovely. The down ticking to the negative side along with the MACD to the negative side is looking great. We look at the RSI and it's breaking through the support and resistance levels we have set, which is great as well. But we need another indication to let us know that it'll be time to close out our initial trades. So once we see a pullback, we want to place our fib levels up. As you see, the fib levels are placed. When you're shorting, you start from the top and go down to the bottom of the wick. But let's say we do not know yet. So let's line it up. Let's look at the MACD histogram. And if you zoom in, you'll see that the histogram is starting to uptick. Right there. It's starting to uptick. That's one indication. If you line that up, you'll see that the uptick was this bar right here. That's why we dragged it down to this level, the fib. So your first trades, you would have wrote it down to this retracement and closed them out. Also, you have to remember that we use fib levels, which are price reversal zones, as entries and exits for trades. So we would have closed our first trades out, and we also would have shorted the market once again and rolled them down to the next PRZ levels. So we would have shorted the market at this level, and we would have rolled it down to the next PRZ. And as you see, price went down to the next PRZ level, beautifully hit. We would have placed more positions to go short, as we see the MAs are still heading downward and it's looking great. And we ride it to the next PRZ. As you see, it hit. We would have rolled this all the way down, and our exits and entries would have been based off of our fib levels. So once again, price was making higher lows. It was bullish. However, when we look on the RSI was overbought. It was at the 70 mark level, so it started to head down as it should. And at the second peak, we realized that it is definitely heading down. That was the signal right there to short the market. If you need more confirmation, you could have went to the histogram and MACD. Notice that the histogram was down ticking right along with the MACD crossing over. You could have shorted the market, and as you shorted the market, you waiting for an indication to close out your initial trades, which will be the first retracement or pullback. How you would have known it was coming? You could have looked at your RSI. If you didn't get anything from there, you could have looked at your MACD and histogram and realized that the histogram did an uptick right here. It uptick, and right where it uptick was the first retracement, which was at the 0% level, which is where we placed the fibs. When because we're shorting the market, we went from top to bottom. That would have been our first take profit for our initial trades, and also would have been our entry for our next set of trades to short the market. We would have rolled it down to the next PRZ price reversal zone, which it hit beautifully. We would have closed out. We would have laddered some more short positions and rolled it down to the next PRZ zone, which would have been our TP. As you see, beautifully hit. We would have rolled that all the way down. Call all the pips. Alrighty.